Hey traders, welcome back to my channel. Today we are chatting about breakouts, specifically false breakouts. So I did a post on this today and you guys really liked it, so I wanted to elaborate on what they mean and how you can look out for them and how to trade or avoid trading them. So first of all, a breakout, for those of you who don't know, is where you have a support or resistance area. Okay, so I have a zone drawn in here. I trade zone to zone. And a break of that area is essentially when price just breaks above it or below it. Okay, so you're kind of stuck at an area. So in this case, it would be an area of resistance, and price finally breaks above it. And so a lot of times, if you get a break of an area, price will continue on upward, right? Which is what happened here. It keeps going up and up. Sometimes, however, the market can kind of indicate that it's breaking an area, and then it'll do the opposite of, it'll kind of reverse, okay? And there are a few reasons that happens. We'll chat about that in a little bit, but I'm going to show you some examples of that. So there are certain pairs that you'll want to trade the breakout strategy using. Other people will trade using what's called the break and retest. That's what I like to use. But on certain pairs, the breakout strategy works better, which is essentially you'll buy, okay, either on the breakout candle or after it, depending on the time frame that you trade with. So what will happen when you get a false breakout? I'm just going to try to find one. This is kind of one, you guys. I'm going to point this out anyway. So in this case, like you've got, I'm not going to draw the whole zone in, but you've got this area, right, that price is consolidating inside of, or it's not really moving in either direction. I'm on the 15-minute, by the way, and it's usually better to look at these sort of things on the 15-minute because it shows you more price action, right? The lower the time frame, the more price action you'll see. So in this case, let's make these black because red's not really nice to look at. Okay, so we can see here that price did break above, right? Like the body came up above this zone, but it went right back down. So it didn't actually break above. So had you bought here, right, you likely would have got stopped out because it came right back down. And it actually happened here as well. This is a better example, actually. So price broke here, right? And ended up coming right back down. Now, the way you can avoid trading these, okay, is so when you have a breakout, let me go back to the good example. What you should do is always use price action, okay, to confirm your entry. Meaning you don't want to enter the trade until you see a continuation in your intended direction. So I would never enter on this candle, okay? I want to see the second candle or the next candle on a lower time frame, like the 15-minute, going in my intended direction. So in this case, I wanted to see a second bullish candle, okay? That indicates to me that it's not a false breakout and it is going to continue in that direction. So that's just a tip for you. This won't always work, okay? There are going to be times where, you know, like let's go back to this example because it would have happened here. Had you waited, so in this case, you would have seen a little bit of bullish action here, okay, because it did end up coming up and then quickly went back down. All right, so depending on where your take profit was, you might have entered here with confirmation and got stopped out, and that's just currency trading. You are going to take some trades that don't work out for whatever reason. Okay, this was probably a news event right here, or just a little bit of slippage, and that's normal. But most of the time, this is going to work for you. Let me give you another example here of where this would work, okay? So this is the one we looked at. Now, price did end up coming down a little bit, but that's okay because our stop loss would have been down here, okay? Or even lower probably, depending on your take profit. because usually when we determine our take profit and stop loss, it's on the higher time frames, you guys. I'm just trying to find another example for you where we got a nice break. Even if you look here, and this isn't a great breakout by any stretch, but if you look at this area here, we had a little bit of a break above. Now this is on the 15, okay? And then you see here we get more momentum on the second candle. So that's what you're looking for, right? Especially when you're trading the breakout. Very, very important. Here's another example using the same zone I had drawn in earlier. So we get a nice breakout, and then we get, no, this didn't end up working, but it's a good example of when it doesn't work. So it didn't work out there. And like I said, it's not always going to. I'm going to try to find another one where it does. And remember, you guys, like I'm looking, okay, in this case, it would have worked out as well. I'm looking only on the 15-minute time frame, okay, because I'm just trying to show you examples. We would have looked at the 4-hour time frame and a whole bunch of other variables before entering a trade. So, but here is another example for you. So we see that breakout and you confirm your entry with the second candle. So that's just a tip on avoiding those false breakouts. Let's find one more false breakout so I can just show you. This would have looked like a false breakout. So when this candle was forming, this, like the body would have come all the way up to here, right? So our zone would be here. And the body would have come all the way up to here, right? But we wouldn't have entered because this candle came right back down. Do you see what I mean? So that's going to really help you there. And I think that's it, you guys. So I did want to mention to you the reason that these happen, okay, the reason these false breaks happen, it's often news. So it's probably just a news event. And what will happen is price will come up a little bit because of news, and then a whole bunch of buyers, retail traders especially, jump in on the buy because they want that break to happen, right? And they see a little bit of momentum and they jump in. And it kind of creates a trap, and you'll hear it called a trap, right? Because it's looking like it's going to break, but then it doesn't. So that's why your price action is extremely important. That's it for this video, you guys. I'm going to end it there and have this uploaded for you soon. If you like these videos, please subscribe to my channel, and I will see you guys in the next one.